Afternoon, Fabian and Eddie with the musings of Winston. We're covering the week of October 1st to October 5th. And we have the correction in bonds. It worries us a little bit. We're going to talk about that and some numbers. We have the NAFTA agreement between Canada and Mexico, what it means for the other economic blocs. We have this very strange and suspicious cyber attack. We want to try to decipher what it means. Italy, more noise, more stories. GE, new guy on the block, old guy out. Oil close to 100. What do we think about that? We have the Brazil election. We have the labor report, and then like always, what is coming this week. So let's start with the fixed income correction. We have the all-time high on the Dow on Monday, but then all of a sudden the bond market, went into a tailspin. The yield, the 10-year, went from like 305 to 323. So the highest yield since 2011. And like we had the correction in February, and that was more like prompted by the salaries, the average hourly wage. Sorry about that. Growing more than expected. Indications that the Fed might have to act sooner. And that's what. Remember, the S&P went down 8% after we have the news. And here we have a similar move, but with no news. We all know that the economy is strong, that the Fed is in autopilot to raise rates. There is nothing relatively new, but however, we have a big drop. And, the NASDAQ dropped 3%. I think that combined with the China news, we'll talk about that later. But if you have a portfolio that is very long or very exposed, maybe it's not a bad idea to think about taking some chips off the table. 323 on the long bond is something. We haven't seen that since 2011. We have NAFTA. It was signed. Here is one of the places we like, EWW, Mexico, which is the only emerging market that is up. And now that Canada is in, obviously, this still have to be ratified by Congress. But still, now that Canada is in, the question is how China will react. Remember, the U.S. and the European Union had agreed to bring tariffs to zero. Negotiations still to go, but the tariffs are already very low, so it's not a very difficult goal to achieve. With China, the United States or the market bought some time. The tariff were only 10%, not 25%. They will kick in to 25% as of 2019. So we have time to do some negotiations. So that's kind of thing, the pressure. There's a lot of comments on research pieces on the note about whether we're going to a full-scale trade war with China. This is what J.P. Morgan thinks is the scenario for 2019. Some of the people that know we're going to find a solution. And then these very different perceptions, how the Chinese perceive the world different than the West in terms of their economic, putting people into the middle class, stories that we heard so many times before. So it's very difficult to, make a good conclusion on that. But clearly, it's something to, that we've been watching and we've been talking for a while. And then on top of that, we have the cyber attack. According to Bloomberg, the Chinese military has been implanted these chips, which are basically the size of a head pin, even smaller, into a lot of servers into the United States. They're talking about Amazon, Apple. Now there were reports, even the CIA, the U.S. Navy, which basically that chip basically opens the door from the inside so people can go in and do all kinds of things. The firms have denied that it is true, but in the meantime, this creates another problem because, a lot of the semiconductor producers of China, they have gone down 10, 15, 20%, thinking that the U.S. might put now big barriers into, semiconductors in China. So, and it's very, very strange. So we'll keep a close eye and we'll follow it. Then let's move to Italy, where, the 10-year Italian bond went from 279 to 340 in a space of a few weeks. As a reference, the German bond is 0.5%. So you can get 3.4% in euros in Italy. And basically, the whole thing is because the government says we're going to run a 2.4 deficit fiscal deficit to GDP. Brussels says that's unacceptable. It has to be only 1%. And basically, the new government says, tough luck. That's going to be next year. And then in 2020, we're going to go back to, normal or whatever Brussels requires. So that's been, a big argument and, between Brussels and Rome. But, at the end, we think that the government in Italy will do whatever it wants. No, that creates more tension and friction in the European bloc. Some people were talking this week about leaving the euro and leaving the bloc and all those kind of things, which we don't think nothing is going to happen imminently. As someone said, since World War II, Italy have had 64 governments. So the chances of the new government to last for long are not very long. In the meantime, you can make 3.25, 3.4% in 10-year bonds. GE, a stock that has a lot of problems and not going very well. It went a big rally of 16% after John Flannery was fired, only after 1 year on the post. And now Larry Culp, CULP, is the new CEO. The stock rally. Some of you have asked me about the company. Very difficult. I'm kind of just not really involved there. Oil at $85 between Iran, the sanctions kicking in November, and people say they might lose as much as 25% of their production, plus the self-inflicted wounds of Venezuela. Some analysts are thinking seriously of a dollar of 100, and that the Saudis and the Russians are not too happy because as again the higher price the oil goes, the more you invite people at the margin, like sand and shale producers and very deep offshore that's very expensive. So for the producers at a very low cost, they don't want the price to go too high. But it looks like for the time being, maybe we have a spike into the 3 digits, by year end. Today, Sunday, we have the Brazil election. Uh, Bolsonaro is the likely candidate to win. A guy from the far right, he makes no qualms about that. And the question is whether he might win in the first round or he will go into a second round. Some of the people that I know in Brazil and I've been talking over the last few days think that it's a very high probability that he will win on the first round. We will keep you informed through our WhatsApp and our tweets. Finally, for the week, we had the labor report. It was 134,000, below the already adjusted by the Hurricane figure of 180. The previous figure was 205, and it was cut down to 180 because of the Hurricane Florence, but then it was lower. However, the prior month was revised higher, August, so at the end it was not a big change in new jobs. However, the unemployment rate came at 3.7, the lowest number since 1969. So basically almost a 50-year low in unemployment rate. Obviously, all the politicians in office took credit for such an achievement. And what's coming this week? We have PPI on Wednesday. The market expects 2.9. And then we have CPI on Thursday. There the market expects 2.4. And then on Friday, we start the earnings of the third quarter. Starts with the big banks, Citi, JP Morgan, Wells Fargo report. So we'll be following that. And remember, tomorrow is Columbus Day. We will not be doing our daily program. We'll be looking at the markets only. There is only the equity market will be open tomorrow, not others. And then, as I say, the big companies start reporting starting Friday. We're going to be following closely and reporting. And like always, for our subscribers, 9:45 every day, talking about the markets. And you also can find more information in our page, Winston.capital, this YouTube channel, Fabian Onetti, and we are now on Twitter and on Instagram as Winston Capital. Have a great week. We'll reconnect the next weekend.